Welcome back to Beyond the 529. With the costs of college continuing to rise at such a rapid pace, it's very uncommon for most families in today's day and age to be able to put their kids through college without utilizing some type of student loans to do it. And this is where most families unfortunately go wrong and end up setting up both themselves and their students for future pain with excessive amounts of debt that they didn't effectively plan for. In today's video, I'm going to cover the difference between subsidized loans and unsubsidized loans and how utilizing one versus another, if you have the opportunity, can significantly affect your costs. I'm Mike Bank, founder and president of Equivest Financial Advisors. I've helped hundreds of families throughout the country develop strategies to win the game of paying for college. I can help your student pick the right schools to get as much free money as possible, maximize your family's finances to get more financial aid and scholarships, minimize your student loan debt by picking the right student loans, and pay for college as efficiently as possible to lower your costs by thousands of dollars, all while protecting your family's retirement. If you'd like to learn more about how we can help you develop a plan to implement strategies like this, please click the link in the description below to learn how you can become our client. So when it comes to the difference between subsidized loans and unsubsidized loans, the biggest difference you need to be aware of is how interest accrues on those particular loans. For a subsidized loan, there's no interest that accrues during grace periods, such as when your student is in school, because the federal government actually covers the cost of that interest. Whereas for an unsubsidized loan, interest is going to accrue all through the period that your student is in school, and it's ultimately going to be their responsibility to pay back. So for example, if your student has been approved for a $3,500 subsidized loan, at the end of school, the principal amount they're going to have to pay back on that loan is still going to be $3,500. Whereas on an unsubsidized loan, they're ultimately going to be paying back the $3,500 that they borrowed, plus the interest that is accrued over however many years they've been in school at whatever the current rates are for student loans at that time. So which of these two options is better? Let's say you're buying a house and you have to get a mortgage. Would you prefer a mortgage where the lender allowed you to wait 4 years to accrue any interest on that mortgage, or one which made you pay it back right out of the gate? So it's easy to see where it can be a big benefit to our student if they're able to get these subsidized loans. Now, even though a subsidized loan is a better option than an unsubsidized loan, your student has to meet certain criteria to be eligible to get a subsidized loan. First and foremost, your family needs to have demonstrated financial need at the schools that you're applying to. If you're not sure what financial need is, or check out my other video on understanding your EFC, where I break down what that is and how it directly impacts what your family's financial need is going to be at each of your schools. Next is that only undergrad students are eligible for subsidized loans. This does not apply to any graduate students. And when it comes to the portion of loan that will be subsidized for your student, that amount is ultimately calculated by the Financial Aid Office, and it's subject to certain federal limits. The primary type of subsidized loan is the Federal Direct Stafford Loan that will be in your student's name. All other loans that could be in the parent's name or the student's name, like the Parent Plus loan or a private student loan, is ultimately going to be unsubsidized. When it comes to unsubsidized loans, all students are eligible to borrow up to the federally allowed limits on an annual basis, and a student can borrow the remaining amount up to the federal limit that was not already subsidized. So for example, the current federal limit for freshman year is $5,500, of which only $3,500 of that could be subsidized. So if your student is eligible to get $3,500 in subsidized loan amount, they can still borrow the additional amount up to that $5,500 under the unsubsidized terms. Overall, the rates and fees are going to be the same whether you're taking out a subsidized loan or an unsubsidized loan. So when it comes to your student being able to take advantage of subsidized loans, you have to do some strategic planning ahead of time. Your student is only going to be eligible for those loans if you position them properly and given them the best chance that they have for need-based financial aid. And the primary way that you're going to do that is by choosing your schools wisely and by taking certain steps within your financial life to make sure that your family's EFC is going to be as low as possible. Minimizing your EFC and choosing your schools effectively are two primary strategies that we help families implement on a daily basis. Lastly, you need to make sure that you coordinate your assets effectively. So when you're looking at school and you're deciding where your student is going to go, you want to make sure that you've got a plan in place for all 4 years before you've ever signed on the dotted line. Only once you've put that comprehensive picture together ahead of time can you really understand whether or not you're going to be able to take advantage of a subsidized versus an unsubsidized loan. There are quite a few other requirements that your student has to meet in order to be eligible for subsidized loans. I'm not going to cover them all in this video today, but I did want to show you some of the bigger requirements so you can be familiar with them going forward. The first is that your student has to be enrolled in school at least half-time. The next is that there are citizenship requirements to getting subsidized loans. The student either has to be a U.S. citizen, a permanent resident, or an eligible non-citizen. The student also has to have earned their high school diploma or GED, and anyone hoping to get a subsidized loan has to file the FAFSA. The FAFSA is simply the free application for federal student aid and is the primary financial aid application that's out there. If you're not familiar with that, go check out my other video where I break down what the FAFSA is and some of the different components that go into it. The last item that I'm going to mention here is just that the student has to maintain a certain workload and certain grade point level to continue to be eligible for those subsidized loans. If you found the information that I covered today to be valuable, please make sure to click the like button below and subscribe to my channel for additional tips and videos to help you win the game of paying for college. And if you want to learn more about becoming a client and how we can develop a plan for you to lower your cost of college by thousands of dollars, please make sure to click the link in the description below. Thank you and good luck going beyond the 529.